Tariq Muad with Muad.com. Just wanted to do a quick follow through on the previous video on the MACD rejection or support. And again, we're taking a look at situations where on the MACD, if we see that on a bearish situation, if the MACD is unable to move back above a zero line, that generally tends to be a sell signal. So zero line, of course. If we see that there's some failure or rejection to recapture the zero line, that by itself becomes a sell signal at that point. Also, in situations where we see a market come and test the zero line on the MACD and bounce, that also generally tends to be a signal indicating that somewhere around here markets are poised to move higher. So let's take a look at some examples. We won't spend too much time because the same concept is very simple. Either you're finding support around the zero line for a situation where the markets might go up, or conversely you're seeing that the MACDs are unable to recapture the level above zero line, and then there's failure and prices go down. Now keep in mind, what we are looking for here more than anything is symmetry. Symmetry, or what I call uniformity. Once you can see some type of uniformity and symmetry action, that's only when you can take the trade. If it's not symmetrical, just let it be. And again, symmetrical also means that sometimes you'll see that it doesn't get as close to the zero line as you might want. It might get close to the zero line and turn around, or might get close to the zero line and turn around. So it doesn't have to touch the zero line. It's just the action around the zero line that you have to watch for. And again, it has to be uniform action for this to play out perfectly. So let's take a look at some examples. And what I've done in these examples is I have removed all the other indicators so we can take a look at the MACDs properly here. And just simple here, we can see rejection did not move on a weekly chart for this stock POT. It did not get to the zero line here. Hope you can see that there was failure on one of the MACDs to move above the zero line. Did not get to the zero line. The zero line should be somewhere around here. Didn't get even close to it. That in itself was a sell signal without even having any other information. Let's take a look at a 5-year weekly for the same stock. And on a 5-year weekly, we can see that there was another instant. So on a 5-year weekly, take a look at some of these rejection periods here. 5-year weekly POT, uniform rejection around the 50 level, or the zero line, sorry. Zero line on the MACD. This one is the main MACD, which corresponds with this high somewhere here. This high here. Again, there's uniform rejection at the zero line. It goes above zero, back below it with uniform activity, which corresponds with this failure. Again, we see uniform activity rejection above zero, back below it for those highs there. This actually also corresponds with the other MACD showing uniform activity during this period. But the key on this one is because we are looking at rejection around the zero line, which is this one gives a perfect example. So we can see rejection 3 times, and each instant the market did make a short-term high. Let's take a look at another stock here. And again, this is a 5-year weekly. You can see here rejection at the zero line of the MACD at the beginning of 2015, which is for these highs at about 25. Right now the stock is trading at 11. The point here is that uniform rejection above zero line and back below it was good enough to tell you that this was a struggling area in the stock, and that was correct because the stock did see a massive pullback over the next couple of months. Now this doesn't always have to be on the way down. Let's take a look at some examples here. You can see uniform activity below the zero line and back above it. This is a monthly chart, and this zero line uniform activity, this action here, was good to tell you that this was a turnaround situation, this time to the upside, and the stock did move higher. We see again it did the same thing. It bounced below the zero line and back above the zero line with uniform activity. So this is some type of a rejection, we can call it that, which was good for these highs here stock went on to record another swing trade to new highs. So that makes sense that uniform activity was good enough on this monthly chart to give you bounce territory because of that uniform activity support. Now I just want to couple this with the fact that if you take a look at this uniform activity here, this bounce, which was this level here, it also corresponds eventually with a crossover of the MACD. This crossover of the MACD was taking place above zero, and we know that crossovers above zero are more meaningful and more actionable. So again, we see that this was good enough because of the uniform activity at these lows, but we also see that the MACDs did cross over. The main MACD crossed over above zero, and a crossover above zero is a better buy signal than a crossover below zero. So that all makes sense, and it all ties into what we've been learning on this MACD series. Take a look again at another monthly chart for a different stock, and I just want to go back to the prior video. Take a look at this action here. This is uniform action below zero and back above it. This is perfect uniform activity. As you can see, if you split it in two, you can see that there's equal space between this side and this side when it was trading below zero. And that is going back to the prior video. That uniform activity suggests that at the time, once it moves back above the zero line here, it was a buy because it was already showing uniform activity over the last couple of months during this period here. And so you want to be looking to go long after it moves back above zero after confirming uniformity. That corresponds to the price level here of about $3.50, $4. And if you see what happened after that uniform activity from about this level here, stock would go on to record highs as high as $10, $10.50. So that uniform activity was a good indication of where prices and momentum was moving towards. Now take a look at this monthly chart for a different stock. You can see two examples of uniform activity support at the zero line for these lows here, about $1.50, $2. And again, it did the same thing, bounced exactly on the zero line with uniform activity. In fact, there was perfect support at zero line, which was for these lows. So good entry there based on what we are looking at. Now, I'd like to touch on something here. We see that the stock did have a nice spike after breaking out, and I digress a little bit here. The breakout there happened to correspond with the main MACD moving above. Let's take a look at the MACD. So the main MACD was also moving above zero. It was also pushing to fresh 3-year highs on the MACD, and the smaller MACD time frame was also breaking out to 3-year highs, which might explain this price breakout and a good explosion where the stock would go on to more than double in about 3 months. Why? Because it met the minimum requirements for the ultimate Muade breakout. So you can see that breakout was a classic breakout where the MACDs did move to fresh 3-year highs for a nice double in price. If we take a look at what the RSI was doing at that time, we see that it confirms our idea that stocks move and move with pace once they show that their RSI and MACDs are moving to fresh 3-year highs, as is the case here. So a little bit of a digression, but that again to reinforce that this is the best buy signal that one can find in the market. Let's take a look at another monthly chart support. Uniform activity bounce exactly on the zero line here for this stock, and that support and bounce on the zero line on the MACD was during these lows here of about $13 or so. Stock would go on to trade as high as 45 after that. So nice movement in the stock there. And again, just to rehash this, if we take a look at why the stock did, this is a monthly chart, about 5-year monthly chart. We see that the reason why the stock did well is because the RSI jumped to 3-year highs, or the MACD jumped to 3-year highs there. The other MACD also jumped to 3-year highs and moved above zero for the first time in years. So that's the ultimate Muade breakout, and we see that again that the RSI was also on the monthly moving to 3-year highs. So that was the reason why the stock was a good moving stock here towards late 2000, from middle 2014 to early 2015, about 1 year. All this movement, this massive movement, began with the RSI and the MACDs moving to 3-year highs. And for this purpose of this video, we see that support did come at the 0 line before the move, before the explosive move. Let's take a look at another example, AMED, on a weekly chart, 2-year weekly this time. Just want to show you this example here where the stock did try to test the 0 line, didn't even get to the 0 line, and did move higher. We also see that that corresponds with a crossover above 0. Crossovers above 0 are more powerful. We can also see that there was support with a movement below 0 and back above it during this period, about April of 2015. So this is uniform activity below 0, back above it. That's good support. And that also corresponds with the main MACD holding above the 0 line, holding nicely above that 0 line, which is what you wanted to see for a bounce. And after those two support levels, you can see that the stock did move from about this period here in the higher 20s and went on to trade in the higher 40s. So nice support based on the uniformity support that we are discussing here. Let's take a look at the ETF, the UNG natural gas ETF, and we can see here uniform activity above 0, back below it. That's a rejection period. That corresponds nicely with this high, and the stock did go down, hasn't been back to those levels. And again, we see another instant of uniform activity rejection above 0 and back below it for another sell signal. So that's a rejection period, which is for these highs. And we see rejection at the 0 line of the MACD, which is for these highs here. Now that is clearly defined, as you can see, rejection at the 0 line there. If you take a look at the main MACD, we see that there was also rejection during this uniform activity rejection here. It also corresponds with this RSI failing to move above 0 on the main MACD. Another reason why here in November the stock did struggle, the ETF struggled, coming off the highs, and from around this point hasn't been back to those levels. So that uniform activity did make sense. Let's take a look at a daily chart for the Dow Transports. And we see, I want to highlight two areas where we have uniform activity rejection. Here, it failed to move above the 0 line sometime in April, which corresponds with the highs of April here. And the Dow Transports haven't been back to those levels since. And we see another instant in the current market here over the last week or so, failing to hold above 0. It went above 0 and back below it with uniform activity, which was good enough for these daily highs here. So we see that that rejection at the 0 line can be used to gauge which way markets are going. So if you find that your markets are struggling to hold a 0 line on the MACD, so that 0 line is something very easy to identify. Failure with uniform activity at the 0 line is a sell signal, even if it's failure to close enough, while support with uniform activity of any kind at the 0 line is a buy signal, and even instances where it doesn't get close to that 0 line is still a buy signal. And keep in mind, crossovers above the 0 line are bullish, while crossovers on a bearish kind below 0 line are bearish. So that's, again, going back to the concept of uniform activity rejection or support on your MACDs. They can help you identify which way markets are going. Eric Mwade, Mwade.com. Good luck, peace, and blessings. EACS.